We got some breaking news right now. Want to bring you from OpenAI. Kate Rooney's got the story. Kate.
Andrew, good morning. So OpenAI is officially laying out plans to change the company's corporate structure, saying in a blog post just out that they will become a for-profit company, specifically a public benefit corporation after being founded as a nonprofit research lab about a decade ago. Says in this blog post, its existing for-profit arm will transform into a PBC, as they're also called, with what they call ordinary shares of stock. We did report that this pivot was in the works, but it is the first time the $157 billion AI company has addressed it. They're acknowledging some cash realities here, saying, quote, "We once again need to raise more capital than we'd imagined. Investors want to back us, but at this scale of capital need conventional equity and less what they call structural bespokeness." PBCs do operate with traditional governance structures, but they have a dual mandate. That's one of the big differences, both a fiduciary duty, so creating shareholder value, and then any sort of publicly stated mission. If you got Ben & Jerry's, think of Patagonia, those are well-known examples of PBCs, Warby Parker and Allbirds as well, and then Musk's xAI and Anthropic, which is a rival of OpenAI. OpenAI did have what they describe as that bespoke structure. It was a capped profit company. It was controlled by the nonprofit. They do say that nonprofit is still going to exist. They're going to hire staff still to pursue charitable initiatives with a, quote, significant interest in the PBC at a fair value that will be determined by independent financial advisors. Also saying here, the current structure doesn't allow the board to consider the direct interest of those who have financed their mission. Plenty of details, though, are left out here, including when this will all happen. And, guys, of course, the elephant in the room right now for OpenAI is Elon Musk, battling right now to block this in court. He is also an OpenAI founder. Musk has sued the company to block OpenAI from converting into a for-profit, described it as a, quote, total scam. Earlier in the month, OpenAI has fired back, saying that Musk is trying to slow them down as he builds his own competitor, xAI, and that Elon, they say, has pushed for this for-profit transition. That was before he left the company, guys.
Yeah, let me ask you this, actually. As somebody who has followed this company for a long time, Kate, and this whole litigation battle with Elon Musk, is there a way for you to handicap it at this point?
The litigation, if this will actually go through, it's so unique, Andrew. It's interesting. Looking at sort of the lawsuits back and forth, you can see there's some validity on both sides, where you can see from Musk's perspective, him laying out sort of the uniqueness of for-profit transitioning, and then OpenAI on the other side, first of all, has a lot of receipts from Elon Musk saying that he did want to transition this into a for-profit company, and saying that, you know, his motivations might not be totally pure here, that he's got a major competitor to OpenAI. It's going to be interesting. I mean, unprecedented, I think, doesn't begin to describe what's happening here. You have all of these companies that started as research labs, really deep tech, and now are some of the most valuable companies in the world at this point. So investors I talk to are excited about this transition and hope that it happens, because you could imagine what you call, you know, a bespoke structure is not something that every investors want to get into at this point. They really just want it to be a normal company, a company that could eventually go public and return capital to their shareholders.
But that's the bottom line, Kate, that this paves the way for them to IPO.
Yeah, absolutely. Okay. Yeah, I mean, there's a million examples of these public benefit corporations, and they're essentially the exact same corporate structure as any publicly traded company. But it's interesting, they do have that dual mandate. So they've got the sort of, yes, you got to make money for your shareholders, but they have this publicly stated mission, which a lot of these AI companies now have. It's sort of the structure du jour for any AI company. But I've talked to folks, too, who say it actually gives you a little bit of a legal shield, because if there's ever a point which you say, okay, there's artificial general intelligence, we need to pull the plug, or there's some sort of safety issue, you can actually point to that other mission saying, okay, I know we lost money for our shareholders because of that, but we also have this dual mandate. So there's a little bit of a legal kind of factor there that's interesting when it does come to AI.
Well, did you see the story in The Information, though?
Which one?
This one about this $100 billion mark?
Oh, that they, wait, walk me through it, because I probably didn't.
My understanding of it is that I read a story just yesterday suggesting that it's not just about reaching AGI, which the group can decide on.
Oh, that's subjective.
But that it's actually mathematical.
Oh, interesting.
Meaning it has to be that the company can create $100 billion in revenue. And
that was one knock on, and I know you talked to Sam Altman at DealBook, Andrew, but about the whole AGI milestone and that watermark, because it is seen as subjective. Some say you're kind of already there. And then the Microsoft relationship is really interesting that you talked to Altman about at length. But I think that's another interesting factor. I mean, they go through in this blog post sort of the history and the initial backing of Microsoft. They also mention Amazon in here, one of the early backers. And so Microsoft obviously has a huge interest and stake in this company. But I think their interests might not be totally aligned going forward. We'll see if that relationship stays on track.
Right.
But fascinating stuff.